Welcome to Trading Soil. My name is Samuel Emeka. I am the mentor that will teach you how to turn your losses into profit with just one winning trade. Hope you are in good state of mind. And if so, let's dive into today's video titled Support and Resistance. Many traders do not really understand the concept of support and resistance. Support and resistance needs to be placed based on the trend direction. What is support? Support is a help rendered to the weak and needy. While resistance, at the other hand, means the capacity to resist a demand. It can also be defined as a force to oppose motion. When it comes to the financial market, support and resistance need to be well understood, like demand and supply. Support means a weak supply of an asset demand. This happens when the supply volume of an asset is not up to its demand volume. Resistance means a strong supply of an asset demand. This happens when the supply volume of an asset meets up with its demand or greater than it. For me to illustrate support and resistance, I would like to use the Forex chart, GBP USD. This illustration applies to all financial markets, be it stock, crypto, bond. They are all the same when it comes to technical analysis. When the market is downtrend, what is going on is that the market makers, which are the institutional traders, are showing interest on the quote currency. They have shifted their interest from the base currency to the quote currency. Now, you need to focus your attention based on the direction of the market. When the market makers shift their attention, you will see the market forming lower low, lower high. Now, how to plot your support and resistance? When the supply of the quote currency comes in by the institutional traders, they move the trend to the downside. When they move the trend to the downside, they know that the market has been oversold. You need to really understand this explanation for you to understand what is going on in the financial market. So I would advise you pay attention to my explanation so that you can get it right. When the institutional traders, who are the market makers, put in their orders, they trigger the market movement. So when they supply their order in the market, they move the trend to the downside. At this point, they know the limit where traders will lose interest from investing on that trend direction, which is quote currency when it comes to downtrend. Now, when the traders are losing interest from investing to that trend direction, what they do is they will need to support the trend in order to meet the demand of traders, because at this phase, traders will be expecting to see the market pull back a little to at least the equilibrium zone. This is when traders will start showing interest in investing on the cold currency. And this is why you will always see the market pulling back, because the institutional traders know they are not the only participants of the market, and they cannot move the market alone to start going, because the movement of the market involves a lot of other huge sum of money to move the market. That is why you will see they will always support the market to pull back to the demand of the traders. So when they support the market to move back, and when the market is now moving back, it gets to a stage where they will resist the market from going up, telling the participants that are interested in investing on the cold currency that this is the limit of discount we can give. So traders that understand at the equilibrium zone will start investing, because they know the market will soon continue to the downside. So once the price meets the resistance of the market makers, they put in their order again to move the market to the downside. And that is why you will see the market will continue to break to the downside. And once the price breaks the support zone, that is when you will see traders will start to lose interest, taking their profit and leave the market, because they believe at that point the market is oversold. So they will be demanding for a pullback, and that is when you will see the market makers will also need to support the price, the market, to pull back a bit so that traders can continue to participate in the trend movement. This is what is happening when you see a downtrend, because if you understand the index of the market movement, you will know when the price is coming down, it means that the cold currency is being appreciated. And when the price is going up, it means that the base currency is being appreciated. So this is what is going on when the price is going downtrend. The market makers are paying more attention in investing their capital on the cold currency, and they also are the one to support the price to move up based on the demand of the traders. Because when the swing move, it gets to a point of oversold where traders will lose interest from investing in that asset, expecting the price to pull back to the equilibrium zone, or at least a discount zone where they can continue to invest in the asset. So when it comes to downtrend, the downside will always be the support zone, while the upside will be the resistance zone. And the market will start forming lower low and lower high. And when it comes to the uptrend, the same thing is applicable. It means that the market makers have shifted their interest from the cold currency to the base currency. They are showing more interest on the base currency. So all their attention is to move the market to the upside until it gets to a targeted point before they can reverse the trend to start going the opposite side. But when the market is uptrend, what is going on is that the institutional traders are investing huge sum of amount on the base currency. And that is why you will see the trend will start forming higher high and higher low. When the market moves to the upside, traders lose interest at that point, demanding that the market should pull back to at least maybe the equilibrium zone or to a discount level where they can start to participate on that trend direction. So when they, the market makers, observe this, they will support the price, push it down a bit. So when they push it down, they know their resistance points. And when the price gets to their resistance point, they will resist the price from going down. And that is when you will see they will put in huge sum of amount again to move the price to the upside. So at this point, when they move the price to the downside, they have given a discount area where participants, those of the traders that are interested to invest in the base currency, can come in to invest. That is what they are doing. So once they have seen that the traders have showed interest to invest, they start moving the market back to the upside. And once the market, the price, break the support zone, traders start to see it as oversold. Don't get confused that I am using oversold, but that is the best language I can use, because once something is oversold, the price is on a high side. People start to lose interest in that product or in that asset, demanding for the price to come down before they can continue to invest in that particular product or asset. And that is what you are seeing going on in the chart. Each of these swing points is a price movement, which traders will always demand for a discount so that they can participate in that trend movement. And this is why you will always see a pullback in any trend direction, because traders or participants will always demand for a discount to get involved in the trend movement. And the market makers also understand this, and that is why they will always support the price in order to push it back a bit to meet with the demand of traders. When it comes to uptrend, when they push it back, it gets to a limit of their resistance. They are the one to resist the price, telling the traders that at this junction, we cannot allow it to go further down, because they also have interest zone where they will not want the price to come to. So when it gets to a limit of their resistance point, they will resist the price from continuing going down, and they start pushing it to the upside again. And that is what is going on in this uptrend. So they are the ones supporting the price to pull back, and they are the ones resisting the price to push up. So this is what you need to understand. So the concept of support and resistance should be well clear to you, so that when you come to your chart, you understand what is going on and where to put your support and resistance zone. What majority of traders are doing, which I see that is wrong, is when they come to the chart, they take the base currency area, which is the downside of the swing, which we call the buyer's side of the swing. They take it to be their support zone, and they take the upper swing point, which we see as the seller's area of interest. They take it to be their resistance zone, which is wrong to me. Despite the trend direction, that is what they are doing. So it shows to me that majority of traders do not understand the real concept of support and resistance. When a currency of a country is weak, that is when you will see the central banks will start to look for how to support that currency to gain strength, so that investors can start to participate in the affairs of the country. They can come to invest. But once the currency is weak, nobody wants to have any business to do. Like inflation rates. If there is high inflation rate, it will affect the currency of a country. And this is when the central banks will start to come in to look into it and see how they can support the currency to start moving up. Maybe they will start to cut their interest rate so that people can find interest in the currency. So this is the same thing that is going on in the chart. And this is the same concept the big traders, like institutional traders, are doing. So you must understand the concept of support and resistance before you can draw it on the chart. You must understand what is going on when the market is downtrend and when the market is uptrend. When we talk of support turn resistance, it signifies change of interest in the financial market. When the market is on downtrend and we see support turn resistance, it means that traders or the institutional traders are shifting their interest from the quote currency to the base currency. They are now investing huge sum of amount on the base currency than the quote currency. And that is why you will see the last support of the downtrend will engulf the last resistance of the downtrend, which is a signal to traders that the trend is likely to change to the upside, and traders start to position themselves for an investment opportunity. When the market is uptrend and you observe support turn resistance, it means that the institutional traders are shifting their interest from the base currency to the quote currency. This is when you will see the last support of the base currency will engulf the last resistance zone of the base currency. This shows strength in the quote currency than the base currency, which signifies that the institutional traders are likely to shift their interest from the base currency to the quote currency. Traders will now look for an opportunity to start investing on the quote currency rather than to continue investing on the base currency. This is what support turn resistance mean. You need to understand the proper concept of support turn resistance before you can plot it on your chart. Before I go on, if you find this video interesting and you believe what I am explaining is making sense, I would like you to support this channel by clicking the subscribe button and turn on your notification bell so that you will receive an update whenever I upload a new videos like this. Mind you, support and resistance need to be drawn based on the trend direction. This will show that you really understand what is going on in the financial market. This concept is applicable to all the financial markets. Once more, when the market is downtrend, your resistance zone will be up, while your support will be below. This means that the institutional traders are paying more attention to the quote currency than the base currency. Their investment volume is more on the quote currency than the base currency. And when the market is downtrend, pay more attention on the quote currency than the base currency. They are the ones supporting the market to push to the upside, to meet up with the demand of traders, because they know traders will always demand for a discount to participate in the trend direction. And that is where you will see them supporting the price after the swing move to move it up to a discount area where other participants can participate in the trend movement. And when it gets to a discount area where the belief is enough for traders to participate, they resist the price from going to the upside and they move the market to the downside. And that is what you will always see when it's downtrend, and you will see the market forming lower low, lower high. And when it's uptrend, the same thing is applicable. You will see that the institutional traders have shifted their interests from the quote currency to the base currency. They are the one moving the market. They are the market makers. They are the one that triggers the trend. They are the one that will cause the trend movement in the market. And once they push the market to the upside, they know that other participants will lose interest, demanding for discount. And that is when you will see them supporting the market to come back to a discount area. And when the market reach its discount area, they will resist the price from going down and push it again to the upside. And once the price breaks the previous high, then traders will see it as oversold. And when traders see it as oversold, the market makers will come to support the price, to push it back below so that it can meet with the traders' demand. And when it gets to a set limit of traders' demand, they, the market makers, will resist the price again from going down and will push it to the upside. And that is when you will see the market structure will start to form higher high, higher low. This is what is going on in the financial market. So when you understand this concept, you will know how to plot your support and resistance. You will know that your support and resistance zone is supposed to be plotted based on the trend direction. Alright, that is enough for this video. Hope you understand what I have just explained. If so, I would like you to drop your comment in the comment section below. Give the video a like if you find any value in it, and if not, you can also drop your comments below. I will be glad to answer to your questions. Thank you. See you in the next one.